So No CMO podcast, episode 30. We're back with Jason Kraus after a long break here. Haven't done it in about a year, so you're our first guest. We're pretty excited to have you. But quick intro to everything. Obviously we've been working through this entire, whole COVID situation, have grown a lot, changed a lot in terms of the direction of the agency. Really, we're trying to restart the podcast and bring on guests with different types of focus that are highly valuable to up and coming entrepreneurs. We're going to be really focused on providing a ton of value and giving experiences to people. Definitely being a lot more selective with the guests. Every podcast that we're going to do for the next couple of weeks is definitely going to have a focus on a different area. This week we're focusing pretty much on the VC space. Jason, I'll leave kind of you to intro yourself a bit. But do you just kind of want to give people a 2-sentence background on yourself before we do like a deeper dive into your personal story, backstory?
Sure. Yeah, that would be great. And really excited to be here on the podcast with you.
Nice.
Yeah. So my background, or basically, I've been involved in the investment space and early stage startups. Been a part of the Boston Harbor Angels Group, which is one of the most successful angel groups in terms of technology and biotech investments. And then we have started a fund about 3 years ago, EQX Fund, which partners with the angel group as well. And our focus is on first and foremost on the entrepreneurs and founders we invest in, and then done a lot of work in the advisory and consulting for startups as well through a company I had started about 5 years ago called Prepare for VC. So yeah, just passionate about, helping entrepreneurs and helping sort of the people behind those startups become successful in their ventures.
Oh, nice. So, I mean, we can get into kind of each of those one by one a little bit later. I think people, are going to be pretty interested to hear, what types of companies you guys invest in, how you support them, all the different niches and spaces that are kind of, blowing up right now. Kind of even to start with that, I think it's useful for people to have just like how you kind of came to where you are. Obviously most people here are on the entrepreneur startup side of the equation, not the on the VC side, but a lot of interaction there. So I guess, how did you kind of start and get into, your initial kind of career path?
Yeah. So I'd always been entrepreneurial, I'd say, but like never really thought of that as a career path to begin with.
Right.
I sold sold baseball cards as a kid, and then rented out
story.
rented out my college textbooks after I was done with the semester, rented them to other students, and sort of did some smaller things like that. And then was looking, or I had done some internships in college, and more of the I was an economics and math major and was looking more into the finance pathway. So I'd done some like wealth management and, investment firm internships, was kind of thinking of going that pathway, started looking at like masters in finance programs, and eventually found the Babson program through Babson that was a master's in management, but really focused on entrepreneurship and entrepreneurial leadership, and had a good combination of like some of the finance and marketing side, along with actually like learning about all the skills you need to become an entrepreneur. And through that, I think I really got even more excited about the startup space. I had interned actually with that angel group, the Boston Harbor Angels, while I was in school there, and then sort of figured out that like I really liked the investment side in the angel and VC space, as combining that finance and investment strategy, but with entrepreneurship, getting to meet like really cool early stage companies before anybody's really heard of them, and try and figure out what's going to be successful from there. So I mean, from there, got involved in an early stage fund, and then basically launched or I've stuck with that angel group, since I was an intern then, as I was
Nice.
part of another fund, and did consulting and advisory for some startups, like helping them through figuring out, what I was learning and had learned that first year of being in the investment space, helping other startups know how to navigate and like what we were actually looking for in pitches and presentations. Built up a company of my own, prepare for VC, and then got back into more of the investment side the last few years here with EQX Fund.
Interesting. So did you kind of, the story totally makes sense to me as far as, combining kind of that interest in like the financial space with the entrepreneurial like inkling. Did you like have any idea, obviously, your, the initial company you interned for, right? Targeting specific market, specific location, like, was there any inclination for you to go in that direction in particular? Like, did you have a particular interest in like Boston or, any of the like industries that they invest in?
Yeah, it's a good question. I guess, it's been a broader focus. I mean, now a lot of even if you say it's a tech company, most
Ain't anything.
companies are, yeah, it could be any sort of industry there. But
Yeah.
I mean, I just liked, well, I think part of it was the group had a really good, and still does, a really good background of like people coming from, people that were entrepreneurs themselves, people that were coming from the finance side. There were some doctors that in the group, and, medical professionals that are reviewing and like adding their
Right.
opinions on the life science companies. And then there's, some former tech executives that are adding expertise on the technology companies. So I think, the philosophy I've kept is like, you can get to know, or yeah, you can, if you know the people that can help analyze them, you can sort of look at companies in any industry. But
Okay.
some of the similar like principles apply, and in the
Yeah.
actual what you're looking for in the pitch of that there's a big enough problem they're solving, like, how they're going to go about it, the fundraising and go to market strategy and everything. It's just applying it to different industries and knowing the right people to ask questions and dig a little bit deeper with.
Nice, nice. Yeah, I think that adds a bunch of clarity. I guess so. My other question would be, I guess, so transitioning from obviously with them to starting, prepare for VC. What kind of was there something about your experience there that triggered your intent to do that? Like, are startups not prepared for VCs? Obviously,
Yeah.
it's an angel group, but
Yeah. So, and it was sort of in between. The fund I was working for at the time was like in the process of raising a new fund, and started just consulting on the side. But the big reason I started it was, any venture fund or angel group, is receiving hundreds of new pitches and presentations every month, and there's only going to be
yeah,
a handful that they actually meet with, and then pretty small number that end up getting investment from there. So, you know, venture funds, for example, could get, or I guess over the course of a year, they might be reviewing 1,000 companies. 100 of them maybe get a meeting and they make 4 or 5 investments. So, I mean, pretty big gap in terms of like, and the thesis was really that there's a lot of great startups that are just falling through the cracks because they don't know how to
how to
navigate the
best present.
process. And
Yeah,
yeah, and pitching, pitching to your customers is a lot different than pitching to investors. So wanted
yeah.
to help bring that side to the startups and help them figure out that process.
Yeah. Do you think it's a question just of a lack of knowledge from some of these startups? Like, obviously, a lot of startups, serial founders have raised, multiple times, dealt with VCs. Do you think it's like a lack of education question, or is it just a rapidly changing space and people are, companies are just not attuned to what VCs want by some standard?
Um, I think it's a mix. It's you know, it's hard to sort of separate. I mean, one part is just separating yourself out from the pitch, and as a founder, you know everything about your company and your industry,
Yeah,
and there's certain pieces that, like, when you're presenting and an investor needs to know up front, and there's certain pieces that are more details you can figure out in the due diligence process. So
sure.
like having yeah, basically being able to present the story effectively in terms of like keeping that excitement going to the next phase in the process, I think, is challenging for a lot of founders, no matter how many companies they've built up.
Yeah,
And then, yeah, the other side is, I mean, it is, there's always new pieces that need to be adapted to, like, even companies through the pandemic are now figuring out, like, how do we attract angels in a Zoom meeting and pitch without really being able to
right.
see people's
In person.
interactions. And
Yeah,
it's more difficult than pitching in person.
yeah. Do you think there's something to like? Is a lot of that like reading the room in a lot of cases and just anticipating what different VCs or different people are going to be looking for initially in like the first 5 or 10 minutes of a pitch?
Yeah, it is. And like, I mean, some investors are more focused on the technical aspects of the product or the service. Others care more about, the team and the experience building in the space. And,
Yeah,
some are going to be asking more high level questions. Others are going to be really diving into the weeds there. So, yeah, you sort of have to be prepared for different types of investors you're going to be pitching to.
yeah. So walk us through kind of like the process of like how do you actually help a company prepare? Is it a question of training, practice? What are like the steps that founders should be taking? Let's say even if they aren't thinking about raising another round initially, but they're kind of just like entering, just exploring the process per se.
Right. Yeah. So in general, they're going to have a pitch deck, which is about 10, maybe a little bit more slide presentation. The idea is it should be about, a 10-minute or so presentation with some appendix slides that are ready for any questions the investors have, so you can have something prepared to dive into them there. And
Right.
yeah, so they're gonna have, so the first thing is having that pitch deck that like really tells the story and gets people excited. And you probably have two versions too. You might have one that's good to send people, either a deck or just an executive summary document that like is more of an intro, like get to know our company a little bit, and then jump on a call or jump into a meeting from there. Um, and then the meeting one, which is, it's up on the screen. It's a lot more visual. You're presenting and walking them through it. So, it can be just, yeah, again, more visual there to sort of guide them through like your thinking and how when they invest, it's going to turn from wherever it is today into a much bigger company in the future, and have basically grow their investment throughout that process.
Is the pitch deck a little overemphasized? Like I know there's a lot of companies like especially the really early stage companies, they put I remember just being in like an accelerator in college and everything, just like huge emphasis on the pitch deck. You're using all this different software to get the slides right, and then you have to like, copy Airbnb or like whatever their ideal pitch deck is that sort of overemphasized, and there's maybe more importance to just the details of like what's in an executive summary?
um I think it's important, like the main thing, it's important how you present it. And I mean, part of what we're it depends on the group too, but part of what we're looking for on the investment side is, you know, if we're going to make up a smaller piece of the round, or if they're going to need a lot of funding in the future, like the ability to go out there and get other investors excited. We can still get to know the founders pretty well over like longer conversations, and invest in them outside of their ability to present a pitch effectively. But having that skill or having somebody on the team with that skill is important, to know that if they need to go raise a few more $1 million, 8 months from now, they have the skills to go out and do that.
Should it always be the founder in your experience, and like most of the companies that you deal with? Is it always the founder and CEO that's kind of spearheading those efforts?
For the most part, but sometimes it'll be somebody in a different role that's leading, like an operations officer or something. But for the most part, it's either the founder or, at some point they might bring in another CEO or, designate somebody else the CEO.
Co-founder or something.
Yeah.
Yep. Got it. Okay. Interesting. What about, I guess this is kind of like the end all be all or the tough question. And, we've asked, some other types of people in the, VC or angel, industry, this, like, what do you ever encounter a company where it's like, you would recommend against them fundraising, or like you come into that scenario where it's not a good call for a company? And if so,
against
like,
them
what are
the, you mean that they shouldn't go the venture capital route?
They shouldn't go the venture route. Yeah. Or maybe they should go the debt route, or, some other type of.
Absolutely. So the venture route, or basically what venture investors and angel investors are getting in the company, is a percentage stake when the company exits. So,
right.
You're not getting any of the revenues or profits along the way for the most part. You're getting, like, if this company gets acquired, you're getting a percentage of the buyout there. If they go IPO, you're getting, the shares to trade or do whatever you want with at that point. So, I mean, there's plenty of companies that are going to be great, like, long-term businesses and provide, enough. They're going to be able to provide salaries and profit to everybody that's part of the team, but aren't great for equity investors coming on board. So yeah, definitely seen, plenty of those scenarios.
Got it. Are there any other scenarios, like, outside of that are worth
so there's also,
for
like,
a company?
I mean, our model in terms of the EQX Fund and the Boston Harbor Angels is, it's going to be a different model than other, like, venture funds. So, we're writing, if you're basically, if you're a large VC, whatever, $500 million fund, you're going to be looking at investments that, if you need to put a lot of capital into it, or basically you're going to want to put enough to make it, if they have an exit, it's going to be a significant return and for your whole portfolio, versus on our side, if it's a company that might only need over their lifetime a few $1 million in capital and can turn into a $100 million or $200 million business, that's a great exit. Where a lot of the larger VCs are looking at, only companies that have the potential to be a unicorn company.
Really big. Yep. Okay. Got it. Makes sense to me. Cool. And then, like, as far as, like, did you guys do, were there any, like, revenue-based financing deals that you guys did, or debt deals?
No, we don't. Our fund doesn't do that. Looked at, and I've seen, that becoming a little bit more popular in terms of other, other revenue-based financing investments, and that is good. It is a good combination for, again, some of more of those cash flow companies there, especially if there's, like, something they can hit in the short term, or basically they need capital to get to a certain point of growth, that then it's pretty stable cash flow from there. Got
it. Okay, cool. So one more question on the, prepare for VC front, then I do want to get into EQX a little bit more, and kind of hear, about some of the companies potentially in the portfolio. So I guess my other question would be, a lot of our, portfolio companies, as well as, some of the audience sell to startups, whether it's, some type of marketing product or consulting, et cetera. What is like the biggest, pet peeve that you have, having dealt with startups as a, business owner?
Pet peeve of startups in general, or
Yeah.
just,
Or just dealing with them in a business capacity.
yeah, I generally I like working with startups and the founders directly. I think I'd say the only way I don't like it or don't enjoy it is if a company isn't really looking for the feedback and the help. They're just looking to say, can you help me make projections that show I'm worth a $20 million company? And a lot of times in those cases, they're not worth that. And so it's like, but for the most part, like a lot of founders we end up working with are the ones that are, actively looking for that feedback, outside expertise, and advice coming in.
Got it. Okay. That makes a ton of sense. Okay. So like switching gears a bit. So EQX, how did that kind of get started? That was like a few years after you already had to prepare for VC.
Yeah. So it was actually through another group we had done. Basically had a group of real estate investors that were interested in getting, into more of the angel and VC space. And what was part of that Boston Harbor Angels group. Actually teamed up with the head of the group, Ziad Muhaber, on the EQX Fund. And so we brought those other investors in as LPs into the fund. And the thesis is, so we act sort of as a member of the angel group as well. Like we'll invest in some of the same deals. We'll also make our own decisions though, in terms of, we have a few we've done outside the group and just told the members that we were going in and they could follow along with us. But yeah, our model is really like, first and foremost, it's the founders that are the most important. So it's been we've gone into like almost 20 companies so far, and about a third of them are like serial entrepreneurs that have had success in the past. Other founders in there are just corporate leaders and experts in their space, or founders we've really gotten to know and got excited about what they're doing in their current venture and how they're leading it. And it's pretty much the same industry as tech and biotech as the angel group, with a few consumer products built in or mixed in.
Got it. Is it particularly like Boston company? It's not Boston companies, right?
No, it's pretty much across the East Coast, or across across the US. We have a couple in California, Seattle, one in Texas, and at least one or two in the Midwest as well. And then more in Boston and one up in Toronto.
Got it. Cool. So why don't we give me 2 or 3 companies that we kind of want to talk about that are, super interesting out of your portfolio.
Yeah. One of ours is, a big cloud storage company now, Wasabi, just started by the same team as Carbonite, which was basically a data storage company that went public and then got bought back out and turned in a private equity deal. But yeah, basically, founded by like a 6-time serial entrepreneur, and their model, their model is where AWS is charging, or sort of has like a variable model in terms of cloud storage every month that depends on how much data and everything you're using. Theirs is just flat price, fixed fees, and you don't get charged any variable rates there. So it's been growing pretty well, especially through, I think it tripled through the pandemic here, and in terms of revenue. And yeah, they've gotten a lot of press recently as well. Another company that's sort of like outside our traditional model, but was really exciting for us, was we got into this company Dress Barn, which had been formerly a big fashion retail chain across with a bunch of stores across the US. And then actually like a social media influencer and a former like NASA scientist and the founder of Zeus basically bought out the brand, turned it into an e-commerce platform, and it's been growing really well. Since
Nice.
it's been about a year now, and they're doing really well as like a restart of that brand. And then on the medical side too, one I'd highlight is we're in a company, Axton Biosciences, which has their main product they're developing is a diabetes drug and targets certain proteins. But they found out, like, I guess earlier on in the pandemic, that one of the proteins they target could actually be used in a COVID vaccine as well. So they launched a separate part within their organization to develop their own vaccine, and they're going, they're launching some trials in Europe. So yeah,
Crazy.
that's been really exciting.
Nice. Cool. What any other ones?
I mean, I'm excited about all of them, but
Yeah.
I mean, there's like anything, or there's there's one that's combating student loan payments called Future Fuel through employee benefits.
Okay.
And
Interesting.
so basically the same way employers match for a 401k, they can match into a student loan repayment program.
Okay.
And they use
Cool.
their technology and platform to sort of service all of that.
That's big. What between these companies, like, are there any like attributes that kind of identified them as like successful companies or entrepreneurs to you guys, like the things that you were looking for, maybe 3 factors?
Yeah, so I'd say one thing in the initial pitch is like how they describe what they're building. So a lot of the teams we've invested in, they're going to talk about everything we've done as a team, like what they're building and, how it'll impact people. Whereas, they're not going to say like, it's just me, like, this is what I'm offering. And sort of some of those small things like that in terms of just how they describe the whole process and everybody involved. So usually, they'll highlight board members or advisors or anybody else on their team that's been really helpful and, make it bigger than themselves. So I think that's one aspect. The other is just like painting a pretty clear picture of, where this can go with the investment, having regular updates and reports. Like, it's most helpful. Like, we're trying to help out all the startups that we invest in and work with, and the more information they give us, the easier it is to do that. So, they're, a lot of them are pretty open. Like, if things are highlighting all the things that are going well, but also any areas that they are looking for support with. And then there's a whole team of investors that are already behind them that can like make introductions to, new hiring recruits they're looking for, or just other investors for their next round of financing, and add value in other ways.
Interesting. Okay, cool. And how do you, what kind of value do you generally add to the companies?
Yeah, so a lot
how
of
do you
it's
see
just,
it? Yeah.
Yeah, we see it as as adding like value in terms of network and connections, either in their industry or to future investors. And then also like some of it's more of an advisory capacity in terms of, what's worked. Or by now we've seen a lot of startups and can apply some of the lessons from other companies to help them figure out what to do next in their business.
Nice. What, in kind of what you've observed, like in the last year of like fielding these companies from, all three of the companies you're involved with, what are like the three hottest niches or, spaces that are kind of exploding or that you're seeing like a ton of interest in?
Yeah, I'd say,
In biotech, obviously, probably the biggest one, right?
yeah, I mean, biotech is, and, there's still a lot of, there's still a big need and like all the drugs and even medical devices being developed there. Some of them have gotten a push if there's something that ties into COVID, that they can go through trials a little bit faster than they would have before, just through all of this. On the other side, the tech side, anything that enables remote work, from that cloud storage to video conferencing to other channels there, like that's been a big push. And now, I mean, hopefully we'll be back soon, but I think the technology part's gonna stay as like everybody's companies that would never have considered it before are now set up for remote work and sort of adapted to this space, and so have consumers. So yeah, that's a big area. And then a lot of the tech trends that had started at several years ago, like, AI, VR, AR, they're even more developed now and are applying to new industries that haven't updated their technology stack in a while, and now figuring out like how can we use our data more effectively, and how can we sort of optimize everything to be a lot more efficient.
Nice. Yeah, that makes a lot of sense. I think it'll be interesting to see kind of what spaces like evolve after this, and like what comes after type deal.
Right.
But yeah, I think that definitely makes a ton of sense. So a lot of the audience is either like pre-seed companies, maybe companies that haven't thought about raising money too much, or whatever kind of the story, whatever the story is. What do you kind of recommend for them, as far as like what they can do now, being a really early stage company to prepare?
Yeah,
to enter the VC world.
I'd say the first step is just, to get out there and start talking with people. And, like even if you're early or don't have a product out there yet, there is usually something you can still be doing to prove and test it out and gather feedback from like future potential users and customers there. So yeah, I'm always a big fan of like starting those conversations earlier on, and if you can get all the data you need before you build it, saves a lot of time and energy than trying to redevelop things later on. And then I'd say like also consider the fundraising part more of a long-term strategy too, in terms of you might need
might need this.
Yeah, and if you meet investors that are like too early, or it's still a good idea to meet investors that might be a little bit past where you are now, and just start that connection and relationship building.
No, I definitely understand that case, for sure. What should people be looking for? Where can people find you?
Yeah, they can, I guess anybody that listens to the podcast here, have a personal site with like all my social media and it links to my calendar and everything as well. It's just
Nice.
jasonkraus.me. That's Kraus with one S. And
Nice.
yeah, so happy to connect with people there or on LinkedIn or Clubhouse now if you're on there too.
Yeah, that's the other big thing.
Right.
Cool. Yeah, and I guess people can, you can obviously, sign up for Prepare for VC from there. Like submit an application.
Yeah, and so we actually launched on Prepare for VC it's only been about 3 months or so now, but we launched a community platform too that lets it's free for anybody to join, and we have it's about 375 members in there over the first 3 months already.
Nice.
So yeah, we're posting, like, you can chat with other founders. We're hosting some events, doing one next week with Matt Conwell from Rare Breed Ventures and some other investors and marketing professionals, and doing a lot of events and providing other resources for startup founders in there. So
Yeah,
that's
great.
that links to or on the prepareforvc.com website, or just through my personal site I shared. There'll be a link to the community page as well.
Awesome. Yeah, we will link that in the show notes for sure.
Sounds
Get
good.
that out there to people. But it's been great having you